We just had the weekly and the monthly close for Bitcoin, as well as the rest of the crypto markets. We had the stock market monthly closes. So there's a whole lot of information that we have to look at in today's show, and you can expect there will be a lot of manipulation leading into September. We're going to discuss that and a whole lot more in today's show. Make sure you smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content. A little bit of manipulation on the markets probably happening today, coming off of pretty low volume, right? Why? Well, it's actually a bank holiday in the US. The markets will be closed, at least within the TradFi markets, traditional markets, and that leaves low volume within the crypto sector, which ultimately means that it's open for manipulation and whale games. So keep an eye on that. We've been looking at this for quite a long period of time, and that is the daily exchange volume, waiting for it to have a steady uptick of high highs and high lows. And you can see right now it has just come back down towards the bottom over there of the range, and consequently the market is coming down with that. So waiting for a little bit of an uptick. We're going to have a look at the good, the bad, and the ugly in today's show. We'll start off with the bad and the ugly, and then we'll get into some of the more positive signs, because the closes were not optimal. Let's just be honest. Okay, we'll have a look at that. So first and foremost, we're still waiting for the total crypto market cap to increase. Until this moves into a sustainable uptrend, it's going to be really difficult to have the majority of altcoins moving towards the upside and pushing up in a bullish fashion. Right now, you can see we caught within this parallel channel, which is just a series of lower lows and lower highs. That is on the total cryptocurrency market cap. And if you look at total 3, which is really specifically speaking to the degens in the space, the altcoin sector, well, pretty similar, right? You have also over here a series of low lows and lower highs, and you have the key pink zone over here being the prior range breakout level as a very, very strong area of support. If price were to come even one more time down, taking out that low, that would bring it down just below $450 billion market cap for total 3, and that would be an area of strength. But that is still a long way down, right? Septembers are typically bearish months for crypto. That could mean almost 20%, about 20% push into that zone. But longer term, it's probably all a good zone to start to accumulate if you're going to be planning on holding for the next 12 to 18 months, which will focus a very short amount of today's show on those timing cycles. Now, again, not a good look, right? Not a good look over here. If you look at the 2-month time frame for Bitcoin, currently price is stuck below that all-important support resistance flip level. And I'm just simply showing you the 2-month time frame to outline where the major support zones are on price. Well, if you look over here, your key support levels, and we can probably pull up one of these price labels over here. Let's pull up a price label. There it is. That's going to be one very, very significant support level. The next major support level is going to be coming in over here at about 42. So $42,000 to $46,000. Should September be mega bearish and price come all the way down, taking out last month's low, then you'd be looking at that as a major bounce zone, right? That's a big, big bounce zone. Would I call that the end of the bull market? It's all over, pack it up, see you in 4 years? Not quite, right? I would just say that this would be a deeper correction than most of the bull market corrections that you typically see, right? We're 33% into the correction from top to bottom. And in this instance, maybe this would be somewhere around, well, we could actually measure it out. If it did actually get into that zone, you'd be looking at 38 to 42%, right? 40% is not completely out of the question when it comes to these bull market corrections. So where are the levels that I'm looking at? What am I targeting? If you look specifically at the monthly chart and the monthly close, well, we did close above the 3-month key level, which we marked over here. That is an important zone. And I spoke about this. I said, watch for September. There is a possibility that you see something like this, right? September closes above that level. You open the month towards the downside, filling some of that candle wick at $54,263. That is measured as 50% from the top to the bottom of that wick. It comes directly into the zone over here. And then following that wick fill, you do start to push up for the rest of September and maybe close, neutral to slightly bullish, something like that. And then you can look at continuation into October, which as per seasonality would lead into that US presidential election phase, which are marked over here with the blue line that's running down the screen. And that's typically where you start to see prices move onwards and upwards. So that is your monthly time frame. When you go on to the monthly time frame for both ETH and BTC, I have Ethereum on the right hand side, Bitcoin on the left hand side. You can see the momentum oscillators do look terrible for everything that it's worth, right? Stochastic RSI is coming down on both. You have over here your MACDs also moving towards the downside, prepping to turn red over there. So not looking good in that regard. But when you compare the two to one another over here, you can see that Ethereum has actually come into a key area much sooner than what Bitcoin has. We know that the sentiment is pretty shot when it comes to Ethereum. You have ETH, which found support exactly at that 50 moving average on the monthly scale, and currently it's holding at the 20 MA. And we spoke about this months ago, many months ago. We spoke about when this candle started to provide a warning on both Bitcoin and ETH. That was coming in July over here. You can see we said that if you do start to lose the 7 moving average, the white one over here, then your next major support levels come all the way below, which is going to be the 20 and the 50. ETH has hit that level, but if you look at Bitcoin over here, well, unfortunately, Bitcoin has not, right? So could there be an environment where ETH has bottomed over here and ETH starts to push towards the upside against both the BTC and the USD pair, whilst Bitcoin still comes down lower into this 44K region? Well, that's totally possible, right? Again, if we go back to these levels over here, that would be in alignment with hitting this key zone as shown on the 2-month time frame. So very high time frame overview, but definitely worthwhile looking at. And you can see over here this tweet, it says it really is $80 ETH 2018 levels of hate, right? The type of hate that we had when ETH went down to $80. Everybody spoke about the death spiral of ETH and that it was all over. It truly was over. And he says betting on significant underperformance from here on is effectively betting on it being over for Ethereum, with it getting replaced by Solana or otherwise. There's not much ETH specific downside other than that to be priced in, basically suggesting that, you know, maybe, just maybe, the worst is over. Why I find this interesting is because when you line up with the technicals, as I've just suggested, you're coming on ETH into the key monthly levels, the 50 and the 20 MA. Those are significant bounce zones. Not only that, the ETH BTC chart, you can see coming into this yellow zone, which is a clear order block that led to the big move towards the upside. Also, the bottom of that downsloping channel, which is creating our falling wedge formation. And you are seeing a little bit of support coming into the zone. So I do think it's one to watch for. You can also see over here, if you look at the ETH USD, well, the massive inefficiency wick that occurred on the 5th of August, that has been filled, right? You've come more or less into the 50% level. You could come a little bit lower, but nevertheless, I do think it's interesting. Now, you are seeing a lot of similarities, as Benjamin has shown over here, to what occurred with ETH USD all the way back in 2016 and what's occurring right now. You can see, you know, January was green in both those years, 2016 and 2024. February green, March green, April red on both, May green, June red, July red, August red, September in 2016 was green, right? So you can see over here, it came down, September was green, and then following that, you had 3 more months of downside on ETH USD, right? So if you do get a little bit of a bounce and it follows in a similar fashion, I think we'll be cautious for lower highs on the ETH USD pair. Maybe you would then lead for 3 more months downside leading into the end of the year, and that pretty much marks the end of the bearish path for ETH, right? Which has just been obliterated. If you look at the ETH BTC pair, well, in terms of weeks, I mean, this has literally been down only for 142 weeks. I'll remind you, there's 52 weeks in a year, which means this is basically 3 years of straight downside price action. And this is typically the way these cycles work, right? 3 years of pain and 1 year of glory. Most people hold on to that 1 year of glory and forget what the pain is like, and they get caught up in that hype, and they end up holding on for another 3 years. Don't let that be you, but nevertheless, food for thought. I definitely think it's interesting. Now, another bearish factor over here is we did get the bearish engulfing candle on the weekly time frame, fully engulfing the prior week's candle that occurred on the 19th of August. And of course, that is a sign of weakness. So looking also at the wick level over here, similar to the monthly candle, it's just a little bit different to the monthly because, of course, it's different price action, but you'd be targeting about $53,610 if price were to break down now in September leading into that wick. So all in all, those are some of the bearish signs. The other bearish signs are, you know, you're spending multiple weeks now below that 21-week exponential moving average, which is starting to move towards the downside. And really, if you just want, how can I call it, pretty much an idiot-proof way of trading, dead simple idiot-proof way of trading? Well, you can, when price is above this and it's angled upwards, you're long and strong, you're holding your positions. And when it's holding below it with lower lows and lower highs, and it's angled towards the downside, well, pretty much you want to be very, very defensive, or possibly even exit the market entirely. Now, the one reason that I've reserved the possibility to at least hold some of the spot positions long over here, but not allocate any new capital in, is purely due to the timing cycles following where we are after the halving cycle, and what we typically see from a seasonal perspective occurring in July, August, September. You expect a major bottom to be formed, and therefore you can still play a defensive game. I think if you got into the market when we did, which was on this candle over here, all the way in January 2023, and you've ridden this entire move up, I think that those spot positions are pretty much safe. I'd continue to hold those just as insurance of a major manipulation or trap towards the downside that is in the form of a shakeout and then prices head higher. But any new capital that you have, which I've pretty much been saving since October of last year, personally, I haven't allocated any new capital into the market since October of 2023, which is almost 1 year now. That I'm going to remain defensive with, waiting for either a break of structure or for the key low levels to get hit before I start to allocate. The other thing worth noting over here is when you look at Bitcoin, well, we actually haven't taken out the yearly open, which was at 42,000. And as mentioned previously on the monthly and weekly timeframe charts, that lines up with some of those key significant areas of support. Whereas if you look at Ethereum, well, Ethereum has already swept below the yearly open. It's taken that level out. And sometimes before you go into mega expansion, that's what happens in the final shakeout phase before the real 1 year of up-only bull market environment, which most people come to know and love. Usually you take out the yearly open as a final shakeout. Now, you can't sugarcoat it. At the end of the day, this chart looks terrible. You are lower lows and lower highs. You're below all moving averages over here on the 5-day time frame, the 3, the 9, and the 30, which is going to be the yellow, the green, and the purple. And we spoke about the significance of getting above this $69,000 level, which just kept failing, right? Fail, 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 fail. And the longer it took to break above that, it meant that bears would eventually take control. Bulls would need to recoup the troops and accumulate or reaccumulate at lower levels before attempting that zone at a later stage. That currently still is the case, right? So this is your bearish perspective, right? Low lows and lower highs. It continues to be the play over here. You do have major support, which is coming in, as mentioned, around that 52 to 53K level. So if you are playing the defensive game, really all you need to do is sit on your hands and wait for two things. Number one, I may be willing to allocate if I saw signs of strength coming into the lower region around that 52 to 53K level. Alternatively, all you have to do is wait for a break of structure, which would be taking out that previous lower high at $65,000, which would look something like this. You're waiting for something like that. Multiple candle closes above there. Then still you would need to print another higher low, and it would look something like this. Then you would have low, higher low, and higher low, and that's where you can start to allocate. So that's kind of the bearish scenario and what I'm watching for over there. You can see if you look at the market, monthly down, weekly down on most coins, daily down, hourly. Just now it was popping a little bit, but already giving up those gains, starting to move back towards the downside. So let's get into some of the more positives now that we got the worst out of the way. Some of the positives, as Jason says over here, S&P 500 highest monthly close in history, right? The monthly closes just occurred across all markets, of course, closing out August, leading into September. He says when the S&P 500 was macro up, Bitcoin followed suit. This is in the prior cycles. More new all-time high monthly closes occurred also in Canada, UK, Germany, India, Brazil, the Dow Jones Industrial average in the US, and then Australia was only 0.4% away from a new all-time high monthly close. These are not bearish factors when it comes to TradFi markets, and consequently, when you zoom out just a little bit in alignment with the timing cycles that we followed, well, this is your little bit of bullish hopium, right? That ultimately you have over here the candlesticks which are breaking out to new all-time highs each time that occurred within this part of the cycle. Bitcoin did follow, right? So it could be lagging a late shakeout within the market. The other bullish factor that we have going on over here is stable coins, right? If you have a look at the stable coins, USDT issued $4 billion, USDC 1.7. You have PYUSD, which is, I think, PayPal USD, 567 million, Euro coin 1.7 million. So giving up, or at least putting 6.3 billion, onto the market. And this is a form of quantitative easing, right? It's our own form of money printing within crypto. And this is typically what happens, right? You have the orange line over here, which is, of course, the stablecoin or USDT supply moving towards the upside, printing. And then you have Bitcoin price. And you can see, for the most part, they follow along. So you have a big divergence taking place over here. Another one of the bullish factors, which could show that this is a shakeout. The other bit of hopium that I'm here to provide you today as your Hopium dealer is that the markets have never, ever topped with Bitcoin dominance topping, right? So Bitcoin dominance is moving towards the top. Instead, the market cycles tend to top when Bitcoin dominance bottoms. Why? Because that is an indication of extreme greed coming into the market, right? Why? Because most people know that altcoins provide the best returns. So at this period of time is when people are most greedy on altcoins. Where is Bitcoin dominance right now? Bitcoin dominance is topping and not bottoming. You can see all the prior times I've marked off over here. These are the prior tops. The pink chart over here is your Bitcoin price analysis, and above that is your Bitcoin dominance. Bitcoin dominance bottoming sets in the Bitcoin cycle tops. Where's Bitcoin now? Dominance is topping, not bottoming. Another bit of hopium for you as your hopium dealer. Next bit of hopium. Q3 is usually the worst quarter, right? Worst performing quarter, with only an average on Bitcoin of 5.45% upside, whereas Q4, which is the next quarter, is actually your best performing quarter with on average 88.84% increase towards the upside. Another bit of bullish hopium over here. Global money supply, as per Quinton, is about to break out, right? So you have over here, this is the global money supply breaking out of that trend line, and ultimately, usually crypto tends to follow along with that. And we've actually seen, if you look at the data over here, for every 10% jump in global liquidity, we've seen that Bitcoin moves by about 90%, right? We had a 5% increase over July and August, and Bitcoin remains flat, right? So lining that up with some of these other divergences like this over here, with the USDT printing more, these are noteworthy things to be looking at. So not only that, but also seasonality. We've spoken about the bottom that typically occurs between August and September, and we're currently following the purple chart over here, the purple trajectory. That's where we are. There's your cycle 4, there's your cycle 3. We're probably most similarly following somewhere between cycle 3 and 4. This is the 5th cycle following the halving, and you can see typically these cycles last around 1,068 days, which means you have around 400 days left before a major top within the cycle. And therefore, we're looking for this 6-month corrective phase to come to an end very, very, very soon. So it will mark exactly 6 months in 10 days time. 10 days time, we get to the yellow line. That is your 6-month mark, which is typical of what we expect the longest corrections within the bull market to be. Now, fear and greed dropping down to 26, back in the fearful zone. As long as bulls can defend price at those key levels throughout the month of September, I think then for the most part, the worst will be over. And overlaid underneath over here, we do have the fear and greed on the bottom. You can see with the white line, and we have Bitcoin price on the top. What I wanted to denote over here, or look at least, is how around those seasonal time periods, August, September, October, November, is where you see the fear and greed with that final flush. And then you can see what happens to Bitcoin price following that, right? So that is as per the seasonal perspective over here. As you come into this little pocket before price starts to move onwards and upwards, we saw that occur on the fear and greed as well. Fear and greed resetting into the extreme fear in 2016 before the next up only move. We saw the same thing over here occur in October 2020, that little shakeout period. And then look at what followed after that. And now we're in the exact same environment right now, chopping about over here within this currently descending broadening wedge formation. You can see it right over there, descending broadening wedge formation. It is a tricky chart pattern to trade. I think use it more as a guideline and not something to actively trade off. Reason why: lower lows and lower highs, right? Lower lows and lower highs trend usually trumps all, price action trumps all as well. Now, you do have a range forming over here with the liquidity on the downside. We have about 16.5 million sitting at $56,800, and just above that we have 15.4 million at $58,000, creating that choppy trading range which price is currently caught within. Now, if Bitcoin does actually go up to $70,000, there's $21 billion worth of shorts which will be liquidated. We are seeing retail stepping onto the short side pretty aggressively at the moment, and if you go into the Whale Room Discord over here under the institutional section, and you can go into the volume deltas over here for Bitcoin, ETH, Solana, NEAR, WIF, and Pepe, all of them are extremely negative over there, just showcasing that most of the market is looking for shorts, right? Most of the market is shorting at the moment, and I think just something to be cognizant of, that sometimes in a low volume environment, you might experience this type of manipulation when you are in a bank holiday within the US, and then watch for tomorrow as the markets open and volume comes back in. You might get these retail traders flushed out, because the market will trade today in a very similar fashion to what we typically see over the weekend. Now, Solana coming into a key level, this level better hold over here, which is going to be your range low. You can see also big wick that was left behind, which came on the 5th of August. Price is coming to fill some of that inefficiency. So do not be surprised if you see Solana come down to 120. That's a key level. You want to see that zone hold. If you look at SUI over here as well, pulling deeper into the fair value gap, I would be looking for a major high low in relation to this area over here on SUI. I'm interested in allocating into that. I haven't deployed any of the capital yet that I've been accumulating since the cash position, at least USDT position, since October last year, but I will be interested in looking to put some into the market at that point. So I'll drop that also in the Whale Room community, as I've told you guys in Whale Room. Of course, as soon as I do decide to allocate, 100% will let you know. All right, now you got TON coming into the 480 level. That's a key range low level. I'm not convinced that it's going to hold that particular area. I think sentiment is beginning to shift a little bit on TON, and I'm most interested in the $3 region down there. So let's see. Let me know if there's any other requests, what else you guys want. We'll have a look at that. Let's see. Mantra, how's that one doing? Okay. Really grinding into that trend line. A little bit of a warning sign for me personally. I must say it looks more than likely to me that this is going to break this trend line over here, and when it does, I expect a flush straight to the downside, possibly even as low as the range low, which would be coming in at 55 cents, and I think that would become an opportunity. The reason I say that is this is just a massive buildup of liquidity. Longs that just were trailing their stop loss underneath here all the way up. As soon as that breaks, that's going to panic a lot of people out of these positions, and it's probably going to go all the way back down. Okay, let's see. Anything else worth looking at? EOS, I am interested in purchasing some EOS, so I'm eyeing out this region as it comes into the zone over here. I do want to give it a little bit of time, especially as per what I showed you with ETH. If that fractal does play out, remember, ETH could bounce into September and then bleed for another 3 months after that. If that does happen, then that provides pretty much the most optimal time to be buying altcoins over the final quarter of the year, prepping for 2025. So watching EOS for something like that over there. Let's have a look at Render. How's Render doing? Okay, still coming down. Lower lows, lower highs is the name of the game. Probably coming back down to 370. So that's one area of interest. I will be watching that zone. By the way, if you are looking to trade any of these coins, most of them are listed over here on BitGet. BitGet are currently running a promotional opportunity over here where you can win 100,000 USDT prize pool, and you get one signed Messi jersey. All you have to do is use the link in the description below, open up an account over there, and then pretty much each trade that you take is a raffle ticket that will go into this pool over here, which they will pull at a later stage, right? 9 days, 17 hours left to go before the competition ends. There's two parts of the competition. One is going to be a return on investment based on your trades and profits, and the other is going to be as a raffle, right? So have a look at that. Cool. Let's continue on. What else have we got over here? Let's go to Banana. Banana Bot was, of course, or Banana Gun was at least one of the stronger coins. Is it still holding up? Doesn't look like it, right? Similar to what I just showcased with Mantra, long upsloping trend line over here, starting to break down low lows, lower highs, losing this level. Looks very, very likely that it's going to come down to 27.28. If this is still the strongest spot out there in the market, and I believe that it's got great usability. If you actually physically use this bot from a fundamental perspective, it's wonderful. Then that probably provides a good opportunity coming down into that 27. But you know, you can keep it simple. Really, just monitor this total 3, monitor total, and until this moves into an uptrend over here, the majority of these coins are definitely going to be struggling. We'll have a look at Injective. I see that's another query that we have over there. Let's go up to an Injective. Here we go. Okay. So Injective, I outlined this as a zone of interest coming into the pink box over here. Look, because you do have this falling wedge, a massive falling wedge. It's not picture perfect, but coming into the key zone over here, if you can hold above the yellow line, which is at $13.96, I think that maybe put in a little bit of a double bottom over there. That could be an area of interest, right? Okay. Rika, so resistance dog and resistance cat, we can have a look at. Okay, I'm actually on resistance dog right over here. You definitely want to see bulls step in over here to form another higher low right into the zone, but you can see coming straight up to mid-range over there, slight rejection. I'm still holding all of my coins personally, and if it does come a little bit lower, I may be willing to allocate more. Resistance cat taking a bit more of a knock, but high volatility because it's only a $2 million market cap. Same thing over here. You do want to see, just like the rest of the market, form a higher low somewhere around here and then reclaim back into the range. But same thing, right? Pushing straight up from our initial entry, 214% into mid-range, and then coming all the way back down. Okay, we can look at 𝗕𝗬𝗕𝗬. I see there is a request there for 𝗕𝗬𝗕𝗬. I haven't looked at that one for quite a while. So let's go to that. 𝗕𝗬𝗕𝗬, pull that up. Okay, 𝗕𝗬𝗕𝗬𝗕𝗬, look, not looking too good, honestly, just dropping down, but I can immediately start to see, you know, similar patterns over here for most of the coins. This is the environment for a lot of the coins, right? Going from wild swings into tighter and tighter ranges over here, still towards the downside, lower lows, lower highs, bearish structure. But keep an eye on that potential massive falling wedge over here where price could start to break out. So keep an eye on that. Jupiter, okay, coming back down to the bottom of the range. This is the nature of most of these coins, right? All the way back down to the bottom of the range. There it is. You're looking for maybe a little bit of a sweep of the range lows, that level being 68 cents, that level being 68 cents. If you do want to learn more, guys, if you do want to join us in, of course, the Whale Room Discord, there's a whole lot of alpha over here. I'm not the only trader in there. We have a whole group of amazing, proficient, professional traders. If you want to learn more about how we view the markets, what we're looking at, use the link in the description below. I'll see the rest of you all on Whale Room later today when we do our live session. And for the rest of you not in Whale Room, I'll catch you tomorrow. Have a great day and cheers for now.